Here's a trade review on NQ, a trade that we took today live in the community. Before you watch this, make sure you understand fair value gaps, liquidity, and order blocks. All these concepts are used to make sure that we have a really nice 8-to-1 risk reward ratio on this beautiful trade today. So the first thing that we were looking for was the direction of the market and which way it was going. Now, as the market started, it started coming down, and we took a short trade, very nice short trade as well, and we're waiting for this to reverse back up. There were some reversal opportunities all the way up here, but I didn't catch any on the upside, and I was watching to see how the market reacts around here. The key thing to realize so far is the market moved down and it had a pop, about 50% of the retracement, and now still the overall trend on the larger time frame is down. So the continuation move will be a rejection of one of these fair value gaps or order blocks, and I started to look at what was happening around here. At this point, we rejected the midline once, twice. Remember, when there's a big wick here or a big wick here, and you start to put your rectangle tool, the midline is very important. And the first most important thing I saw was a rejection here and an immediate come right back down. Immediate rejection back up, and this made me interested in taking the trade. So as soon as the next candle came back down, this was what I was looking for. As soon as this green candle came up, I was trying to enter in on the midline and as close to it as possible to see if I can enter and start a move that came right back down. By the time I marked it in on my entry, I was in around 634.25. Now, I had a very small stop on this, so I'm not looking for full retracement all the way back down, but I'm looking for a really nice risk and reward ratio to see what would happen. On my entry here on the market order, I see it was coming right back down. What I want to see is if it holds above this level, I would be out. I had a very small stop loss of 5 points, just a little bit less than 5 points. And so on this entry, what I was looking for is if this starts to go right back down, then I will be in the move and we can look at what are some of the targets that we can find. But if this holds and goes right back up here, once it clears this midline, there's a really strong chance it can have an acceleration upwards and go up 15, 20 points. And I don't like having a stop loss that big. Ideally with NQ in the morning, I give it about 10 to 15 points as a stop loss. And then in slower time periods later in the day, I try and focus on around 10. Here, I kept it very small because I had a very clean entry on the push right back down. Then the question is, at what point do you move your stop loss and where are your targets? If you can see down here, this is a very important level. What is this? This is the first fair value gap on the last leg back up. So if this is going to reject this line and come back down, the balance point is going to come down to here. So this level is a very clean target. I initially was calling out the 590 level. And then the second target was going to be the low of 568. Now, as soon as this started to come down, you get to see some movement. Down, a little bit of poke back up into this rectangular area is totally fine. What we don't want is a close above here. And that's the rejection that tells you you are in the right move. Now you can move your stop loss to break even. The point of having a stop loss always is to tell you if you were wrong, you can get out. But this was the key signal candle that says you are correct. This is the rejection that you're looking for. Entry was beautiful. Stop loss was in the correct location. And as soon as this started to go, that's when I can move my stop loss to break even. The beautiful part about this is now you have a free trade. Moving straight back down, the key target was 590. Came back down. Now, one thing to note is, why do you hold through this trade? Why did this go up? And then if you look at it closely, you should remember the market needs balance. There was a fair value gap in here. So as soon as you get a displacement candle here, if you did not catch this move, no problem. This displacement candle is good because it closes below the last leg up. This is short-term market structure shift. This is official market structure shift underneath. And then even here, created a fair value gap. You could place your entry here for a better, more confirmed, slightly lower. And there's a chance you could have missed it if this went straight back down. But this is still a beautiful entry at 625 short with a stop loss at the top of either this candle, or if you place your limit order in here before, you would place your stop loss here at 634. And it would be about a 10-point stop loss. And as soon as it fills you and starts to come right back down, that is your entry. And then target was hit at 590. And then this was the extension target when it comes down to these order blocks. and this got hit as well. After a little bit of work, it hit the 590 target as well. Beautiful trade. But the best part about this is risking 5 points to make 40 points makes it an 8-to-1. So if you're right only 1 out of 7 times, you're still making money.